and welcome to the Tax Roundup for March. Inside this month, we're going to take a look at the legislation that has now passed Parliament on illegal phoenixing. Now, this particular bill extends the director penalty regime to include GST amounts. But first up, we're going to take a look at the big issue of the moment, and that is the super guarantee amnesty that has now passed Parliament. Across to you, Michael.
And one of the major items to come through in the tax world this month is the passage of legislation providing employers with an amnesty for outstanding SG amounts. Now, this has been a long time coming. There was a failed attempt to introduce this a little bit earlier, but we now do have this bill that's passed through Parliament. It's very important for practitioners to be thinking about this as soon as possible, because the amnesty will only run basically for 6 months from here on. So from the date the bill receives royal assent, which hadn't happened as at right now, basically got 6 months to identify problems, figure out what the fix is for those problems, and then actually do something. And that will generally mean letting the ATO know that you have identified this problem and what the amount is, and then start the process of either paying it or enter into some sort of arrangement with the ATO to pay those outstanding amounts. Now, 6 months is not a terribly long amount of time, especially when you consider all the other things that practitioners and clients are going to have to do just as part of their normal business activities over that 6 month period. Particularly if you're aware of clients, businesses who have any sort of contractors in their workforce or have in the past, they'd be very much at the top of the list in terms of identifying whether those arrangements have been dealt with properly, historically, and possibly if not, then figuring out what the exposure might be from an SG point of view. Now, the reason why it's important to really take this amnesty seriously is there's an opportunity that comes with the amnesty, but there's also a threat of, if you don't use it, well, you're going to get hit with harder penalties. The opportunity is that when you are late in paying SG amounts, if you miss the relevant quarterly deadline, normally move straight into the super guaranteed charge rules. And one of the impacts of that is you can't claim a deduction for the super amounts that you end up actually paying. Now, the amnesty says we'll let you claim a deduction for those super amounts when you pay them, if you pay it during the amnesty period. And it's a super amount that qualifies for the amnesty, and there's a bit of work to be done to just double check that. So there's the possibility of claiming deductions for things that would not normally be deductible and won't be deductible if you fail to take advantage of the amnesty and the ATO finds out about the unpaid super amount later on. There's also some relief in terms of the admin charge that gets added on when calculating the SGC amount. That's basically gone, and reduced penalties you would expect in most cases will apply throughout this amnesty period as well. Now, where we get to the other side is if you don't take advantage of the amnesty, but there was a super guarantee issue that could have been fixed up under the amnesty, well, those penalty provisions come into play. What normally happens is that the ATO can impose another penalty on top of the SGC amounts of up to 200% basically. And there's some discretion for the Commissioner in terms of where that penalty sits. Now, if you are a business and you have an SG problem, a historical SG problem, and you don't fix it up under this amnesty, the way the penalty system will work for those amounts is that the penalty will be set at a base rate of 100%. It could be increased, but it can't be lower than 100%, so the Commissioner can't reduce it down. So that's the disadvantage of not taking advantage of the amnesty. So it's really important to identify clients that might be affected, who could potentially take advantage of this, and then actually get on with it and figure out what needs to be done and when it needs to be done by, because that time is going to fly by and the opportunity will then be lost.
Join Michael Carruthers for the Super Guarantee Amnesty webinar on Monday, 23rd of March. In that webinar, he will take you through how to apply that one-off amnesty in practice. I hope you can join us. Now across to that bill extending the director penalty regime.
The other significant piece of legislation from a tax point of view that has passed through Parliament recently is a bill that's really designed to increase, measures around Phoenix companies and avoiding corporate tax liabilities. Now, there's been a number of changes in this area over the years, but this latest one, what it essentially does is it increases the scope of the director penalty regime to include GST and also other indirect taxes like wine equalisation tax and luxury car tax. Now, up until now, that director penalty regime has basically covered unpaid PAYG withholding amounts for a company and also unpaid superannuation guarantee amounts. So if you're a director of a company and it fails to meet those obligations, what can happen is that you can become personally liable for those amounts until they're basically dealt with. These rules, this latest bill, extends the scope of that regime to cover unpaid GST, one equalisation tax and luxury car tax as well. So it means that directors of companies now basically are faced with a greater level of risk in terms of personal exposure if things are not being done correctly at the company level. So important for those people who are directors to be made aware of that and what the steps might be in terms of mitigating risk in that area. Now, what is also quite important is for people who are considering joining the board of a company as a director, in terms of being aware that there are these risks associated with that role. A lot of people, especially who don't necessarily have a great deal of experience in kind of acting with companies and dealing with companies, might have the notion that a company provides limited liability. And that is true to some extent, but what that really means is that it's limited liability for the shareholders of the company. They're limited to the unpaid amount on their shares. What's not necessarily limited in the same way is, I guess, the liability or the risk faced by a director of a company. And for many smaller businesses, the directors and the shareholders are often the same people or they're related to each other. So you will find that people might think that they have this asset protection position in place because they're using a company structure. In fact, it may well be that they or related parties are actually exposed to a fair degree of risk because of their role as a director. Now, if someone is coming on board as a director of a company, one of the things they really should be doing is making sure they're comfortable that a company is up to date with things like PAYG withholding, super guarantee, and now GST and those other indirect taxes. Because as a new director, there's a grace period where you're not really subject to those historical issues, but that ends pretty quickly. And all of a sudden, you potentially are now personally exposed to problems that arose before you became a director of the company. And they become quite a serious issue potentially for those directors. So it's a bit of a worry for those people who are directors. There's more risk associated with doing that, more things to be aware of. It feeds into, I guess, a broader conversation for some clients about asset protection and risk. But important to be aware of that and the practical implications that can potentially have on clients and the way that they set up and structure their corporate organisations.
And that's the tax roundup for this month. If your firm is not a member of Knowledge Shop as yet and you'd like to see how Knowledge Shop helps thousands of accountants across Australia every day with our technical help desk, our work paper knowledge bank, our training and so much more, then give the Knowledge Shop team a call on 1800 800 232. They'd love to show you what we offer. Speak to you soon.